Welcome to Common Sense Investing. My name is Cameron. This is going to be a very short introduction because this is a really good video coming up for you. This is a 35-minute presentation from Enterprise Group today that I'm going to show you. This up here right now is their previous presentation from May of 2023. I've got their tickers up there on the screen for you, trading on the TSX as E and on the OTCQB as ETOLF for Enterprise Group. This is a stock that I've been talking about for a while now, right? Look at the good old days back when price was sitting around 40 cents. I previously covered the stock at around 43 cents. And I was talking about how Enterprise Group is one of those companies that is damaged during COVID because of shutdowns and other operational constraints. And I thought, you know what? I think this company can come out of COVID with some gusto and make shareholders a lot of money. They have done that, up 173% in the past year. 49% year to date shows that their growth maybe isn't done. And this is the company to convince you that, right? The company wants to convince you that share price growth is not done. They want to deliver a new presentation here and give you more information to make a decision as an informed investor. So let's get right to it. I'm going to show you their presentation here. It's about 35 minutes with their CEO and CFO and VP, I believe. And I'm going to disappear because they provide you information and stats and slides that I want you to see. Do not forget, I will be in the live chat. If you're watching this later, go check out the live chat because I'll have a bunch of comments there where I'll be talking with people and giving some of my thoughts. And then at the end, I will pop back up to give my opinion. Let's get right to it.
My name is Leonard Jurasic, President CEO of Enterprise Group. Along with me is Senior Vice President of Corporate Development, Desmond O'Kell. He's going to go through the deck with you and show you our story, and I will jump in with some color commentary as we move along. Thank you all for joining us.
We have a big presence across Western Canada. We are very active in Alberta and Northeastern BC. You can see some of the recent numbers. We've released our annuals for 2023 here about a month ago. So we had 25% growth in revenue up to 35.3 or 35.5 million. Adjusted EBITDA in the up 63% from the year previous to 13.3 million. And of course, our earnings per share up to 12 cents for the year, previous 5. So you can see we're in a situation here where we're delivering some very, very strong, profitable margins, and we're going to talk a little bit about that and how we're achieving that. We're a business with 130 employees with over 3,000 pieces of equipment. The utilization of the fleet is high. We are in a very, very good position here. We've seen over the few years, there was about a 7-year downturn in the energy sector here in Canada. It cleared out a lot of our peers and competitors. Now we're in a much better situation with lots of activity and an outlook that is absolutely superb, especially considering Canada's new participation in the global LNG market. So we're now in a situation where there's a demand on equipment and manpower, and clearly the competitive landscape is a little less populated today than it was 7 and 8 years ago. Some key investor considerations. This is why you want to pay attention to Enterprise. We're a leader in the mobile site infrastructure to the Canadian energy sector, and we possess a current advantage of being a sole provider of low-emission site electrification systems. We are remarkably profitable with substantial margins and rapid expansion trajectory in front of us. We are a provider to the most reputable and sizable producer clients in the sector, and of course, favorable trends in the energy market with avenues to venture into new markets and fostering considerable expansion organically and via acquisitions and mergers. We have a very healthy balance sheet and liquidity to facilitate our strategy for continued growth in this trajectory. We're guided by a seasoned leadership team with a track record and effective strategic implementation. We were very, during that downturn, we were able to navigate that downturn and position ourselves, 4 and 5 years ago terrifically. And I don't mind patting ourselves on the back there. And of course, we have a fervent dedication to enhancing value for shareholders. Through that and through our recent history, we've had significant insider buying and share buybacks. We are now, as management and directors led by Len's position, we have ownership that now exceeds over 35%, and we're going to continue to amass our holdings. Over the course of the last few years, our NCIB program has been very active, certainly at lower prices. When nobody was giving the sector any recognition, we were able to buy 20% of the company back and cancel those shares, equating to about 11.3 million shares. We are doing our business through our 4 subsidiaries. This is who they are: Evolution Power Projects, Westar, Arctic Therm, and Hart. Basically, folks, what we bring to our clients and their project sites is the site infrastructure. So when we're on their drilling and fracking and completion sites, we don't bring any drilling or fracking equipment. What we bring is the site infrastructure that is the mobile office structures, command centers, medic shacks, of course, bathrooms and so forth. We bring out the communication towers. These are very remote locations, so they need to stay in contact with the networks, which are miles away. So we bring all of the also the power systems that power these sites. The need for power is growing. We're with our methods, and we'll get into that. We are plugging in more and more of the activities on site as we move along. Westar here and Hart, they are providers of the full infrastructure packages. Just one call and everything comes out to site. And then, of course, Westar is operating on the BC side. Hart operates in Alberta and Saskatchewan. Arctic Therm here in the middle, this is our IP-rich flameless heating company. It has obviously a very strong but seasonal calendar. What we do there is we have a significant fleet of rental flameless heaters. They are pull behind trailer style, so those go out on rental type applications. They do heating and dry air applications, everything from concrete curing in winter all the way to heating buildings and enclosures and all around the wellhead and so forth. Because it's flameless, it can operate up close to a wellhead, unlike a flamed unit. Evolution Power Projects is our company with the expertise that has triggered a good amount of our growth. This is the company that provides the expertise and the fleet that allows our clients to transition from diesel to natural gas for the purpose of electrifying their sites. What happens when we electrify a site is quite a bit. Not only is a tremendous reduction in sound. At a typical site, you'd have 10 to 20 diesel generators firing on site. We eliminate that, show up with one very large natural gas turbine and a microgrid around the exterior of the location, and everything plugs in. We'll get into this a little more as we move along. You can see our concentration. We're of locations where we are to service our clients. This lends itself to much of the natural gas and gas liquids producers up this foothills of the Rockies. You can see we're everywhere from central Alberta all the way up the Rockies, east of the Rockies, all the way into northeastern BC. Most of our clients are gas and gas liquids players, so you can see how we're weighted there. And of course, our heating division, we do a tremendous amount of activity up in Fort McMurray. We do have a heating location up there. You can see who we're working for. This is just a smattering of names that many of you will notice. Many of them are tier one players, large enough to be caught up in some of the new. In 2020, we had new legislation in Canada that sort of parses out who's a large emitter. And of course, through that legislation, they have to have tracking of emissions and so forth. We'll take you here and we'll talk about our very advanced natural gas power systems that we bring out to site. It's important to know that we have a first mover advantage here. None of our peers and competitors have developed any of these type of low emissions or no emission power systems. So we have this first mover advantage. I don't expect it'll be forever, but at the moment we are building a moat around this. We started these systems, developing and innovating these systems about 5 years ago. And since then, we've not only developed the expertise, but the manpower and the electrical engineering and master electricians and so forth are what used to be a very mechanical traditional energy services business. This is very electrical, so we've had to develop our manpower going forward to be less mechanical and more electrical. These are 480 volt systems. They're not small by any means. So let's talk about this. So we're leading the way in advancing natural gas to electricity methods by mobile power supply for our clients. We're helping them further their ESG goals. But further than that, we do have provincial and federal legislation that's come at us over the last few years that, as I said, that legislation, if you are operating your business and you're producing more than 10 kilotons of CO2 equivalent, you get caught in this heavy emitter legislation. And if you are, and it could be a cement operation, oil and gas extraction, could be any of these, if you're over that 10 kilotons of CO2 emissions, you not only have to track your emissions, you have to report them, and the whole idea is to move your threshold down. If you're over those thresholds, you're paying penalties financially. And of course, if you're under those thresholds, you're able to earn carbon credits, which show up on your balance sheet. So our natural gas methods are saving thousands of liters of diesel fuel on a site. And of course, not only eliminating diesel fuel and handling of it is not only an environmental benefit, but of course, it's a safety advantage as well. So what we've done is we've, as I said, we've innovated these technologies and made them, let's face it, when our projects are happening up in these remote areas, for half the year, we're in Arctic conditions in 20, 30, 35 degree below zero. So this equipment needs to be very robust. And let me explain that when we work for our clients, we not only, when they start a project, we mobilize our equipment out to site. We get everything working, and it's our obligation to keep the site operating. So our field techs are going to site to make sure that everything is operating. And then, of course, when the project is over, we mobilize out. And in most cases, we're mobilizing to another location of the clients. But where I want to talk about, some of the margins that we're developing here over the past few years, and is the fact that when we have a traditional diesel-fired site for electricity, there's several units. We have many light towers on site. Lighting is a big deal. And at the bottom of every light tower is a 6 to 20 kilowatt diesel generator. So on site and with primary power and what have you, you may have 10 to 20 diesel generators on site. It's a tremendous amount of noise. It drinks a lot of diesel fuel fluid, thousands of liters a day. At $1.70 to $2 a liter, we're talking about a major expense for the client. So what happens is when we bring our methods on, we bring into place one natural gas turbine that is capable of powering the entire site. And we have a distributed microgrid around the exterior, and all the light towers and the buildings, everything that needs power plugs into the microgrid. Few things happen there. Obviously, the emissions, which the client is very, very interested in, because if they're a tier one player, they're interested in reducing and tracking their emissions. We do that inside of the service. But when we move from diesel to natural gas, we're talking about massive reductions in emissions. So for the tier one client, this is a very, very incented option for them. But not only that, in about 85% of our project cases, we are actually utilizing the client's natural gas that is produced either on site or nearby. So that completely eliminates a fuel distributor charge for the client. So if they're able to use their own gas, they're benefiting not only by the emissions reductions, but they're paying no one for their fuel, which is massive. And I've got a couple of slides that show a snapshot of what kind of savings could be had on a nominal site. This is some of the electrification equipment we bring out. One central natural gas turbine generator to power the entire site. As I said, natural gas generator can work with source gas or third provider, compressed gas being brought onto site. And of course, there's secondary backup generation as well that we bring to site. So we offer a comprehensive fleet of associated site infrastructure and a full array of lighting solutions that all plug into the grid. You can see on the bottom left the cabling that goes around the exterior of the site. It's all on above ground and on cones. And as you can see, there's a stadium light tower there, and everything plugs in. The distribution panels here on the lower right side, you can see they're very robust. They're twist lock. They're heavy duty. We use large cabling, DLO style cabling. So everything is very, very robust. This is just a bit of a drilling site abbreviated graphic of what a site may look like. And what I mean by abbreviated, you can see the two office structures in the back there. A usual site has anywhere from 8 to 15 structures on site that we bring out in the fleet. So as I said, it's very abbreviated. But this gives you an idea of a layout of a typical drilling site on this slide here. So anyway, I'm just going to cruise through here this is a fuel consumption comparison. A typical 350 kilowatt diesel generator at 100% load, will utilize about and consume about 2,400 liters a day. At $1.60 a liter, you're talking about almost $4,000 a day in just fuel costs alone, let alone the equipment. And of course, in a 90-day project, you're talking about almost $350,000 in fuel costs. By moving to our 333 kilowatt gas turbine at 100% load, now it's important to note that we're utilizing third-party compressed gas here, and we're paying $7 an MCF for that gas. If we actually utilize the client's natural gas, this dollar value actually goes to zero for them. But in comparison to third-party compressed natural gas, you can see that daily totals will go from $3,800 down to $500. So the fuel reduction is absolutely massive. And this is where the ESG, or the reporting of emissions, is very important. That classic 350 kilowatt diesel generator, you can see the different pollutants and the emission rates. And then, of course, you can see when we move to a gas turbine, the emissions on the right-hand side, and you can see the reductions, 96.4% twice here, 100% on SOX, and of course 87 and 99 and 85 for things like NOx and volatile organic compounds and carbon monoxide. So the massive reductions in emissions are really one of the main attractions. Len, is there anything you want to add to that?
Well, I just wanted to, just sort of back up a little bit and make sure that everybody understands that we are the only company in Western Canada that is providing this service, and it really has given us the opportunity to introduce the product to all of our clients, and the clients are buying into it in a very aggressive way. We had a $15 million capex last year just to provide product to put out on sites. We've got a $10 million capex on the go right now. We're already into it for about $3.5 million for additional product that the clients have requested. So we don't buy inventory and have it sit around in the yard. When we get an order, we fulfill it, and it goes to work within 3 weeks after we can modernize it and get it ready for the climate out there. And it really has the opportunity to continue to grow. The major clients are all bought in, and now we're starting to see the mid-sized clients move down, and even some of the smaller players, and the opportunity to continue the growth is actually phenomenal right now.
Mm-hmm. I want to talk a little bit about not only are we in a better energy economy here in Canada, which really started about midway through Q1 of 2021. Right in the middle of the year, we started to see our clients because of better commodity prices globally and locally and what have you. We started to see an uptick in their capex spending in development of their resources. So when they're out there spending more money in the field, they're hiring folks in the energy services business like us. So you can see not only did we get caught in a very positive trend going up, it was coming also at the time that we have this very, very in-demand equipment offering. And like I explained before, the amount of our cost of going out to site when we have a natural gas power system on site, they have 99.8% uptime, very reliable. So our cost of our field techs going to site to solve problems or swap out equipment or make repairs or what have you on the fly reduces dramatically when we have a natural gas turbine on site. So the more activity we do in the turbine electrification of these sites, our margins very much reflect that. You can see not only are we getting 20 to 30% upticks in our revenues, we are dramatically improving our margins. You can see we down at the bottom, gross margins of 24% going to 27, 40, and last year up to 45, with EBITDAs climbing as well, 13, 16, 30, and 40. These types of margins, I think, there's opportunities for us to squeeze out some more, but we're getting to the point where we're very comfortable saying to shareholders that you can count on us delivering margins like you see in this most recent column. Len, anything from you?
Just first quarter numbers aren't out yet. They'll be out early in May. I was talking with our finance department yesterday, and we're looking at over a 20% growth over first quarter last year. So our game plan is intact. That's our goal. But it's really important to know, like Des had mentioned, our real goal is to maintain these margins. This is what the shareholders are looking for. It's what we want as management. And the fact that we've got the first mover advantage on a very exciting project here with Evolution. We're now securing that moat around our operations we're negotiating with the manufacturer of these turbines to be their exclusive supplier of turbines in Western Canada in the oil patch. And if we can do that, it really does limit any kind of potential competition moving forward.
Mm-hmm. Before we get into a new news release that we put out here recently, I'll just go through where we're going from here. It's important to note that we are just scratching the surface in our Canadian energy economy here with these power systems. We've got a tremendous amount of run room here. As I said, we're just scratching the surface on saturation. But basically, our growth strategy going forward is, of course, in the energy sector. We've got continued adoption from the oil and gas producers that are yet to make the transition from diesel to natural gas. And of course, we've got existing customers that are increasing their remote power needs. Not only are they getting more active with more drilling and completion sites, they're also asking many of the other vendors to plug into our systems when they come to site. So our existing clients and our growth on our sites, 2-3 years ago, we were delivering onto site, 160 kilowatt unit, and it had, a good amount of headroom. We've blown through that. We're double that now and more. So just with the existing clients, so you can see how things develop once we've got a relationship. And of course, we're supporting additional operations. It's a natural extension for us to eventually start electrifying the client's fracking systems. We're already supporting a tremendous amount of water transfer operations. When they're pumping water for their needs for completion, there's a tremendous amount of water. Sometimes the sources are several kilometers away. These pumps are power hogs, so we're starting to support water transfer as well. So there's growth in the energy sector in supporting some of these adjacent needs. Now, of course, we've got growth in other areas. We're looking very closely at the mining industry, both at the build stage and operations, and other off-grid or away-from-grid construction projects. This is technology, and our plans and our systems on site can be replicated in other industries. And of course, there's growth from other regions that we haven't established yet. Our current locations are primarily northeastern BC and Alberta. There is expansion for us regionally to other valuable markets across Canada. And of course, if you've followed some of our history, you'll know that I think Enterprise has made 9 acquisitions in our 20-year history. There's been some merger or amalgamations and so forth, and a couple of dispositions that we've done at very timely and good prices for the company. But we are an acquisition company, and we do have an eye for some M&A here in the future. There'll be complementary businesses to our current offerings. And of course, there's going to be some activity outside of our regional services. Len, anything to add there?
Yeah, just like you mentioned, we've got a couple of targets that we've been so busy here the last couple of quarters that we've had to put them on the back burner, but they are still engaged, and we are working to put one for sure if we can before September. Very accretive, very profitable, and for us it fits in like a glove. So like Des mentioned, we know how to buy companies. We've never paid more than 3.1% or 3 times EBITDA for a company. And, as a public company, we're trying to give our shareholders, at least 5.5, 6. So, we have to buy right and then grow the business and enjoy the profitability as we got them. But as Des mentioned, on our dispositions, on 2 companies, we paid $12 million each for them, and sold one for 21.5 and the other one for 20 million. And we know how to sell also. So it's important to know that we know how to watch the bottom line. Money is very important. It's hard to come by, and we respect it, and we're not heavy on debt. You will see in our first quarter numbers that we do have a little bit more debt than normal. It was only because the CapEx of 2023 came at us so hard in the fourth quarter that we bridge financed it. But you'll also see that we're sitting on over $11 million cash in the bank at that point in time, and that money will be dispersed to pay off some debt and continue the CapEx growth.
Mm-hmm. So in summary, obviously, we've achieved a leadership position in the industry, as I described, with our first mover advantage, certainly in the mobile power systems. We do have substantial profitability. I run an internal, certainly margin and EBIT chart for all of the other energy services companies that we may be peers or competitors to, those who report their earnings and so forth, and we have nobody near us in our margins. So we're doing something that's very, very different to the rest of the segment. And of course, our Canadian energy landscape is experiencing a very good expansion right now. We feel that trajectory is still intact. And of course, with investments in the LNG serving as a significant driver of growth here, certainly with our clients, the LNG, we've got LNG Canada that's they're going to start filling up the pipe here soon. And of course, there's 2 and 3 other LNG projects that are coming to the start of construction. So we're really excited about Canada's participation in global LNG, and it's an absolute needle mover for our clients. Therefore, it's a needle mover for us. And of course, the escalating demand for equipment, skilled labor, and expertise has improved prices. Let's face it, I said before, we've seen an absolute halving of our competitors and peers in our sector from that 7-year downturn. So now that we've got a much more buoyant activity level, there's just less equipment and less manpower. It's allowed us to increase our prices, and get back those prices we had to give away back in 2015 and 16. So we're in a very, very good position. And of course, our robust balance sheet and healthy cash flow underpin our current expansion strategy. And of course, we're guided by a seasoned and deeply dedicated management team. Len and I have been here. This is our 20th year with Enterprise. Started Enterprise 20 years ago, and we've been through 3 cycles, and some of them fairly violent. So we're here, still standing, and here to see you again. So, Britt, I know you were going to ask us to talk about our most recent news release, which is, and I'll talk about that right now. Stemming back, it goes back 20 years, which was legislation. What it was called was duty to consult and accommodate in relations to First Nations and their involvement in, of course, industry, and certainly most applicable to the resource extraction world. And of course, the First Nations were very much not participating in any of that. And of course, there was a demand from them to be involved. In most cases, the First Nations are very involved in the resource industry, and they're very for resource extraction. The whole idea is they wanted a bit of a say in it, and they wanted to be involved in the economics of it. So many of the First Nations are understanding of the resource extraction and now have a voice in this process. And further to the settlement that was reached in 2023, which was, if anybody was paying attention to a Supreme Court decision with the Blueberry First Nations up in northeastern BC. That kickstarted what became a settlement about a little over a year ago. And now the First Nations are a participant in shaping the protocols of resource development and permitting, and are very much involved in the resource economy now. And of course, the enterprise agreement that we announced here recently with our First Nations partner is built upon the fact that our methods to provide mobile electrical systems are the most advanced and are the cleanest available. Our continued innovation to develop low or no emission systems is well recognized by our new partner. And of course, the influence of our partner, the influence they possess in the Treaty 8 area is a very strong one. And, they are absolutely involved. And of course, our systems are first to be considered in the Treaty 8 lands. So it's a very, very desirable partnership. They've recognized what we have, and they want it at the forefront in the Treaty 8 regions. I hope that gives a bit of an explanation of what that partnership agreement means to us.
Yeah, no, that's fantastic. Anything to add, Len, or?
If you go back to the asset slide, Des, just want to confirm with the shareholders and the viewers that our banker is an asset-backed lender, so we get our assets appraised twice a year. Once formally by an independent appraisal company, and then after 6 months we do a desktop, basically just reviewing assets sold or assets purchased. And the company is sitting very strong right now with almost $70 million worth of assets. And we're talking about appraised assets. That those are market values that if we took them to an auction. And we've got a $30 million line of credit. We're drawn down on it at $17.5 million, and we have bridge financed approximately $5 million here over the last quarter. But as I did mention, there's a cash position of just over $11 million in the bank, and that will be dispersed into the capex going forward, the $10 million capex going forward, and to knock that debt back down to a viable level. So it's important to know that there's a lot of equity in the company, and that's before we show the profits that we're making. And like Des mentioned, and I mentioned, it's important to us to maintain those margins and create that cash flow that can be dispersed out into the assets purchased or eventually shareholders.
Len, yeah, thanks for drawing the attention back to this slide, which I glossed over. But Len's description of our total adjusted net equity due to those orderly liquidated appraisals of our equipment, which is the real values of them. As you see at the bottom of the screen here, that 69.6 million in total adjusted net is about $1.20 in just breakup value of the company. So we still are in the area that we're trading at still at quite a discount to breakup value without getting any value to business, and certainly as we've described here, in a well-positioned leadership position in our energy segment for sure. Go ahead, Prit, if there were some things that we wanted to move along to.
No, I think that's a very good summary and overview of the company. If there's nothing else to really add here, I think we kind of...
That's it. They just talk about the tickers, and that's the end of the presentation. That was about 35 minutes. Thank you for sitting here and listening to that with me. Again, go check out the comments. I made a bunch of notes. I gave some of my opinion. We had some great discussion. What do you think about Enterprise Group? I mean, typically what people fear is that share price is up. So last year I was covering Enterprise Group at around 40 cents. Now Enterprise Group is at around $1.10. Did they convince you that there's enough potential growth in this company, growth in the top line, growth in the bottom line, potential of a buyout, growth regionally, growth internally? Is there enough growth to look at today's share price of $1.10 Canadian and still be bullish, still consider buying, still make a pitch to someone that, share price could go up from here, right? That's all dependent on what your opinion and whether the company convinced you or not. As far as me, I thought that was one of the best presentations from a company that I've seen in a while. It was very focused, I think, on what investors want, not only what we want to hear, but it was focused on the information that we're looking for, right? There's a lot of talk about growth, but really it was more talk about, margins, paying down the debt. There was some hard things discussed there. Like, that really was not a fluff presentation. What their plan is moving forward, talking about potentially negotiating to be the only supplier of these systems in the oil and gas industry to their clients. So basically, they're openly saying to any potential competition they could get in the future, try and come get us, right? We're gonna build this moat out further. Even though we could get potential, competition in the future, we're going to work to crush it right now. So that's a little bit intimidating. Yeah, just a really good presentation, I thought. So anyway, if you enjoyed this, I'm trying to do this more often, where I'm providing a little bit of extra coverage to these companies by covering some of their earnings calls instead of just going and finding it on their website. You get to have some conversation, watch it here on YouTube with me. If you enjoyed it, please remember to give the video a thumbs up, so that helps promote both me and Enterprise Group. Other than that, I'll see you soon. I'm probably working on a video next for BuildDirect.com flooring, who released earnings as well. So talk to you later.